Okay, today we're going to look at a stock here called Ing Technology. I like it in the short because it has a distribution at the top and then followed by a sell down. You have a good accumulation here, and then finally the volume came, and this was what we call the stopping volume. Finally, that's the last attempt by the insider to flush out all the weak hand holder, and then you have a low accumulation, then beginning of a new run in here. So that's, to me, it's a good thing. It has a low volume test. Now again, it's still below 200 moving average in here. It's still following a very nice trend in here. I will think that some form of profit taking around 175, 180 here level here, perhaps in this level here. But again, look to buy around 170 and put your stop loss probably around 160 here. And who knows? It may go back and retest back 210. Right? This is riding on the positive outlook of US for Ing Technology in here. Right, okay. What's the other stock you have? Intelligent Intelligent London Brunei. IL what? B No such company Integrated Logistic Bahar. Okay. KLB. Okay. That's a simple one. Okay. This one in here is sort of, there's not much. See, some of them days you don't even have any volume at all. So it might go through a long period of accumulation. It hasn't proven to me anything yet so far. I might switch to a weekly chart in here. Yeah, it's a bit early. You see, it go through accumulation for 2-3 months before. I would wait for a breakout above 75 cents in here. You have volume coming in now. If you take position, then you have to see if ILB pays a good dividend. Some dividend, yes. Some dividend is preventing from going down to 30 cents. Right. So I would look at that. If it's still in the early stage of accumulation in here, I would wait for it to retest back again. If you look at the 200-day moving average, it is still far away from the top there. So once it hits here, you will get the attention of the fund managers. Okay. Any more stocks? Do you have a stocks call? Hibiscus. I think that. Okay, 5199. Okay, hibiscus. Yes, it's an all thing. This is quite nice. You get ultra high volume in here. You got another one. This was a classic one. The first breakout, second one, and this is, to me, is a third wave. Yeah, you got the third wave. It's gone ballistic here from 120, 150. I wouldn't want to get here. Here is probably at the high. Probably might see some sort of distribution in here. Look for a pullback, a longer pullback here to around 140, 150. That's a level I'll be interested to buy if I want to trade this. At this junction in here, they're more likely to sell down. Even today, you have very high volume, very wide spread you have here with ultra high volume. And to me, that's something Tom Williams would tell me, don't go in. This is a trap. Okay, because you got ultra high volume in here, meaning it's distribution day, right? Yes. Oh yeah, it gone up 45. It's about 3 times the IPO price, right? And it's riding a lot of good news from then. Uma query. Yep. Okay. So that's my prognosis. Chances here it may go high, but also if you're not fast enough, and if you don't have time to watch, you will lose money. And I noticed over the years, when I don't trade this kind of shares, I consistently make money in the market. Not much, but it's steady money and it's good money too, right? But if I do one of these, I lose 30-40%. As I said before, losses are not symmetrical. If you're down with it 30%, I have to make a lot to make back up. No. So when that end up, I have to trade very small position. And trade small position, win also no shock. Right? Really have to win also no shock. But when I buy those high dividends, I can trade bigger position. Right? Partial pyramiding. Yes, you can do that. You can do that. We do that for. I would. You see, yeah, position sizing. That's right. That is actually a future technique. It's a future technique because in future the commissions are much lower. And but for Malaysian stocks, it's not. I don't recommend because I would think you can do it if you are a regular trader, but if you don't do it well, it takes many years of experience to do it well. You do a 132 or 131 kind of thing. Maybe you go in with 1,000 unit, followed by 3,000 unit by 1,000 unit. But if I see the first day line change, I'll just go in 5,000 unit. That's it. What for? I don't want to bother with 3 days because I have to watch it for 3 days. Because when you're trading futures or you're trading one of those very fast instrument, you gotta test the market and they use it to test it. In our Malaysian markets, it's so much easier. I would just keep things simple and no exit the silver. But I would take partial profit. I wouldn't go in partial position. I would take in partial profit. Like I'll take 50% and let the rest run, which to me is much better way that way. Anyway, it suits you, but you have to test it out, see if it fits you. Because he may say 131, but you end up doing it very badly. Just like if you watch someone on TV makes a very nice cake and you try it yourself without the right recipe, despite what he says. I- exactly. Okay. Ah, okay. Let's look at Puncak too. 6808 lah. Is this the one? Let me just get rid of it first. Puncak is nice. I like it. You got an 18-day line chain. This is a nice one. I would may even post it on my website later. You have outlier volume in here. The risk side is not much. It may come back and retest 120. Again, it's going for and it's really going for this 50. So yeah, 130 to 150 in here. You got outlier one. That definitely there's been a change of pattern. But remember, you have the old high here, which is this here. So it needs energy. It needs volume to break through this level in here. And that was a nice low volume test in here, right? And the market just springs up in here. This is one of the better ones for trading, right? It may come back down to 120, get us some momentum, and then push back up. So you got a choice. Either you get in today, and hopefully tomorrow you ride like what you did with hibiscus, or one of the other stocks. Gamunda. Like Gamuda, that breaks higher back. Okay. Even Gamuda now is broken higher here. I think Gamuda is a better one compared to the DRB high comp. Yeah, you got a little bit of potential here, just about another 10 cents here. The old high, yeah. The momentum is there, riding on it. Right. You try to buy. As I said before, it's always the best policy to find a technique that suits you. You buy on pullback or you buy on the first breakout. One way or another. I notice over the years, I tend to do well. I buy on pullback, but you have to be very patient. And if you do that over a long period, that suits you. But if you tend to jump in and jump out, long run, you will end up paying more commissions. And because at the end, your results are measurable. In my case, being a fund manager, I'm measurable. We want our client to be happy, and if we make money for our clients, they tell their friends, and it's good for us too. Some of their friends may let us manage their money, so that's a good thing too. So we are looking at it from a very conservative side. We like to double our clients' money within 5 or 6 years. 100% return 5, 6, which is what we have proved to have done so far, and we want to do that, right? Because this is, like it or not, is your own personal money or wealth money, and we intend to grow your wealth per se. EPF can be beaten, no problem. EPF is only 5.5%, 6%. You buy F&N already 6% dividend yield, plus another 8% capital gain already 14%. It doesn't take a genius to beat, but unfortunately a lot of people end up buying unit trust and still cannot beat. Yes, there's a lot of news. Yes, there's a lot of news about buy property here, buy property there, and I wonder why. So when I see people, I always advocate open up an EPF account, either let Bill and myself manage you during the time. If you can, just follow our strategy from our website. Buy a few high dividend stocks. You'll do better than EPF. Let me show you some of EPF returns that I have on the website here. Going back to the portfolio here, as you can see, the portfolio for EPL has certainly been only averaging about 5.1% over the last 8 years, 10 years, 8 years, and today also they announced Bernanke will keep interest rate almost at 2014, and that relate to translate to all the central banks in the world, which means low interest rate. So low interest rate means your EPF is not going to do that well, right? So have a strategy, have something that works for you, and keep it simple too. Okay, but get some goal, have faith on goal, and you tend to do well. All right, thank you for listening now, and see you guys next week again.